of support, ideally.
Good morning, everyone. Happy Friday. Well, the markets have made a great run to the upside here, multiple days in a row, as you can see on the S&P futures here. Certainly not unprecedented, but again, this market's been going up for a while, and at this point, we've got what I believe is the extent of the move anyway in the S&P 500. But listen, let me go over a few things with you as far as the technicals and what happened here. We had a sloppy base. We had this, triple type of a bottom. And this is what we call a wide range bar igniting out of a consolidation, which definitely suggests it's going higher. Prices held the support area, and now we've got pretty much not a textbook, but a measured type of move. And now, yesterday, we have a wide range bar that typically ends, meaning a wide range bar after a relatively extended move. Signals the end of a move, and you can look at it as we always look at charts as a representation of what other traders, hedge fund managers, whatever they are, individuals, and how they're trading. And so here, everybody is jumping on board out of a bullish pattern, and over here, after it's been going up for a while, you have those that are late to the party, so to speak, and they're jumping on board, which is most likely not a good time. It doesn't mean the market's going to crash. It just means that on a short-term basis, it's likely to consolidate and pull back. Whether that consolidation is sideways, which would be bullish, or pulls back toward a reference point like this 20 MA, or creates a new reference point. Those are the things to be looking at after a move, and as we look at chart setups. We're always looking at how things set up to see where and when there's a new opportunity. So right now you can see that the futures have gone sideways there, and they're starting to roll over a little bit. That's why we got this little red bar here. So pre-market here, we're getting a little bit of correction, and the weekly is still in a nice uptrend, but you can see, it's not exactly the same, but you can see as it gets further away from support and the rising 20, odds of a pullback increase. Now, what if it just keeps going up? It's possible. And it comes up to the next whole number here, and it just pushes up to 2,600 and keeps going. Well, that would be what we refer to as a climactic type of a run, and that historically results in a deeper pullback. So something else to keep an eye on. So let's take a look at some divergence in this market, meaning the NASDAQ, which has been lagging a bit. It was leading earlier in the year. And now we've got a wide range bar breaking out of a base. Is this the time to be buying this? Well, just looking at the chart here, just from the point of view of, taking it out of the perspective of what's happening in the other markets, which means this has actually been showing some relative weakness, and it's just made this new all-time high rather than having moved up as the S&P has over the last week or so to make the new all-time high. So wide range bar breaking out. Let's say, kind of anemic volume here. Let's see how this holds up here. Those of you that watch the videos for some time, you know that we look for prices to stay in the upper half of a wide range bar, consolidate, and then go higher. So we'll be keeping an eye on that. The Dow caught up. It had been lagging a little bit after leading a couple of weeks ago, kind of lagged, and then it had this run this week. So getting a little extended here. Also on short term, we're looking for a little bit of a pullback. Accidents happen when markets get extended, and one that is happening this morning is Costco. I didn't look, maybe they reported earnings, but it's gapping down here. It's trading at 160 and some change here, 160.30. So a gap down into this little support area. This is going to be in play for gap traders this morning. With a gap like this, you might think, well, Greg, that's a pretty big gap. Well, it's got some more room to fall here. So, it's stalled right here. So we'll see if it can consolidate a bit and then what happens with it from there. Okay, excuse me. Some plays that we have, just show you an example of our advisory letter, which you can get a trial to if you come to the site. So these are some recommendations that we put out last night, and we're going to be looking to initiate a short in the Russell. And this is a short-term view that the market should pull back. However, it has to trade under this low here. We won't just short it. It needs to trigger. So just imagine what this would look like if it's trading down here. It should pull back, and we're going to look to profit from that with this bear call spread. Best Buy, BBY. It has participated in this move up. It's a weak stock. Notice the gap down, another gap down. It's retraced here. We need to see it trade under here, and then we're going to look to participate in that with a bear call spread. And lastly, we got Procter & Gamble here, which is, we have a master trader sell setup. It had broken down. Look at the breakout failure, a breakdown under support, a rally up into resistance, and the moving average is rolling over. And so we're going to be looking to short this, looking for a move down, or buying these puts here, looking for a move lower. So you can take a trial to the page here, and you can take a 21-day trial for $7. And we do have monthly meetings, Facebook group where we cover plays, and you get premium videos and such. It's great service. Give it a try. Anyway, have a great weekend, everyone. Great trading, and we will talk next week.